Charlie Munger didn't sugarcoat anything. For nearly 6 decades, Warren Buffett's right-hand man delivered some of the most brutally honest investing advice ever given. He passed away on November 28, 2023 at age 99, leaving behind wisdom that most investors desperately need to hear but don't want to face. Today, we're diving into his most savage lessons, the uncomfortable truths that separate legendary investors from everyone else. Buckle up, because Munger never cared about hurting your feelings if it meant saving your portfolio. Let's start with Munger's most savage reality check. He said, "I'm a very blocking and tackling kind of a thinker. I just try and avoid being stupid." Notice what he didn't say? He didn't say, "I try to be brilliant." Munger warned, "A lot of people with high IQs are terrible investors because they've got terrible temperaments. Your intelligence means nothing if you panic sell during crashes or chase hot stocks because everyone else is." He emphasized, "The single most important thing, if you want to avoid a lot of stupid errors, is knowing where you're competent and where you aren't." Translation: stop pretending you understand businesses you don't. Stay in your circle of competence or prepare to lose money. It's that simple and that brutal. Here's where Munger really twisted the knife. He declared, "If you can't stomach 50% declines in your investment, you will get the mediocre returns you deserve." Did you catch that? The mediocre returns you deserve. Not just will get, *deserve star. He said it plainly. It's waiting that helps you as an investor, and a lot of people just can't stand to wait. And then the knockout punch. The big money is not in the buying and selling, but in the waiting. Think about that. While Wall Street wants you trading constantly, racking up fees for them, Munger built billions by doing basically nothing. He understood that good investing requires a weird combination of patience and aggression. And not many people have it. Most investors don't fail because they pick bad stocks. They fail because they can't sit still. As he noted, the desire to get rich fast is pretty dangerous. Want to get rich? Learn to be bored. Now this one really makes people angry. The entire financial industry tells you to diversify. Munger? He called excessive diversification diversification and wasn't subtle about it. At a 2021 shareholder meeting, he said, "I think it's much easier to find 5 than it is to find 100. And I'm way more comfortable owning 2 or 3 stocks, which I think I know something about and where I think I have an advantage." His logic was savage but sound. If you actually understand a business deeply, why would you dilute your returns by buying 50 other things you understand less? He realized that it's the relatively few big winners that make investors the most money over the long run. But here's the crucial caveat: this only works if you're willing to do the work. Munger stressed, "If you want to succeed in investments, start early and try hard and keep doing it. All success comes that way by and large. Most investors aren't willing to put in that effort, which is exactly why they should stick with index funds." Here's one of Munger's most psychologically devastating observations. He stated bluntly, "The world is not driven by greed. It's driven by envy. Think about your worst investing decisions. Were they really about making money, or were they about keeping up with someone else? That neighbor who bragged about crypto gains? That coworker killing it with meme stocks? That's envy, and it will destroy your portfolio faster than any market crash." Munger had perspective. Someone will always be getting richer faster than you. This is not a tragedy. But for most investors, it feels like one. They see someone else's gains and abandon their strategy, chasing returns that have already happened. He taught what Benjamin Franklin knew. If you would persuade, appeal to interest and not to reason. Wall Street knows this. They sell you the dream of easy money because they know you're watching everyone else get rich. Don't fall for it. Munger had no patience for overcomplicated investing strategies. He advocated simplicity. Keeping things simple greatly reduces errors. The more complicated an idea or investment thesis, the more likely it is to be wrong. He believed, simplicity has a way of improving performance by enabling us to better understand what we are doing. If you can't explain your investment thesis to a 10-year-old, you probably don't understand it yourself. He and Buffett kept 3 investing baskets. Yes, no, and too tough to understand. That third category is where most investors lose money, buying things they don't understand because they sound sophisticated or everyone else is doing it. The savage truth? Munger said, I've always believed that nothing was worth an infinite price. Yet during every bubble, investors convince themselves that some new technology or trend has changed the rules. It hasn't. It never does. This might be Munger's most cynical and most accurate lesson. He famously said, "Show me the incentive and I will show you the outcome." He even quoted Benjamin Franklin's wisdom on this, emphasizing, "Never, ever, think about something else when you should be thinking about the power of incentives." Want to know why your financial advisor keeps recommending actively managed funds? Follow the incentives. Wonder why CNBC hosts are always screaming about what to buy and sell? Follow the incentives. Curious why crypto exchanges spent millions on Super Bowl ads? Follow the incentives. Munger offered career advice that applies to investing too. Don't sell anything you wouldn't buy yourself. Don't work for anyone you don't respect and admire. Work only with people you enjoy. Most of Wall Street fails all 3 tests. They're selling you products they'd never buy, working for firms that prioritize commissions over clients, and surrounded by people motivated purely by money. That's why their advice is usually terrible. Finally, Munger's most liberating savage truth. He acknowledged, there's no way that you can live an adequate life without many mistakes. In fact, one trick in life is to get so you can handle mistakes. Every legendary investor has lost money. The difference? They learn. The most important thing is knowing where you are competent and where you aren't. The human mind tries to make you believe you are smarter than you are. Rub your nose in your mistakes. He admitted, I have made bad business decisions. You can't live a successful life without doing some difficult things that go wrong. That's just the nature of the game. But here's the key, he emphasized. Acknowledging what you don't know is the dawning of wisdom. Most investors can't admit when they're wrong. They hold losing positions hoping they'll come back. They double down on bad decisions. They blame the market instead of their judgment. Munger's advice was to spend each day trying to be a little wiser than you were when you woke up. Not richer, wiser. The money follows wisdom, not the other way around. Charlie Munger's mental models approach to investing produced phenomenal success for himself and for Berkshire Hathaway. His holding in Berkshire alone went from $16 per share to almost $300,000. Not through trading, not through complexity, but through patience, simplicity, and brutal self-honesty. The question is, can you handle these truths, or will you keep making the same mistakes that keep most investors poor? Charlie wouldn't care either way, but your future self will. Don't miss the next insight. Hit subscribe for more smart investing breakdowns.